Okay, so this week's table of knowledge, we're going to do N is for non-deductible.
That's right, we sure are.
I think it's an important thing because we spend a lot of time trying to explain to people why they can't claim what they think that they can. So let's just talk about why something is deductible or non-deductible. And I think we start with the most boring thing in the world, the legislation.
I'll let you go there, Jo. I'm sure you know more than I do.
Okay, so it's right at the beginning of the Income Tax Assessment Act of 1997 in Section 8-1, where there is the definition of why something is tax deductible. And something is tax deductible to the extent that it is incurred in the gaining or producing of assessable income, except where the loss is outgoing is of a capital, private or domestic nature. So there's a couple of things there. It has to be connected with the income that you're earning, and I think that is something that a lot of people don't really quite get. How is what I'm buying connected with the income I'm earning?
Yeah, that's right. And especially, we say it all the time, you can't claim things that are for private use, that are not business related.
Yeah, so they have actually carved out their capital in nature. So capital means that it's something that either will be depreciated or it may be something that's going to have capital gains tax attracted to it, in which case it's a totally different part of the Tax Act. And the private and domestic. So this is where we often have the conversations where people can often connect what it is that they're doing to somehow show that it could be related to what they're doing to earn income. But there is that private and domestic element to it, and how do you break that out?
Yeah, so Jo, are you able to portion something? So if you use something for business and private, whether it might be a car or whatever it might be, can you claim the business portion of that?
Yeah. So so if it is private and there is a bit of private and domestic, we can. So I just want to go through on the ATO website. They've got the 3 golden rules when it comes to tax deductions for business. Now, these are applicable to business, but if you are an individual taxpayer and you're looking at a tax deduction, again, you can use the same logic here. Okay, it's just that it's not in a business sense. So the first one is the expense must have been for your business. So it can't have been for someone else's business. It's got to be for your business. And it has to have been available as an allowable deduction. So there are parts of the Tax Act which say what we can and can't claim, and not for private use. So again, those things. The second rule is if it is a mix of business and private use, you can only claim the proportion of business use, not the portion that's private use. And the third is that you must have records to prove it. So when it comes to trying to proportion it, you need to have a record to work out how you've proportioned them.
And how would you recommend that business owners keep those? How do you record that?
Okay, so it is really looking at what the expense is and trying to work out how you could record it. So if it was a phone, for example, you could go back and look at what the calls are being made and what have you. There is the ability to have some things that have incidental use, and a phone is probably one of those. But again, if you're trying to claim your phone for work purposes, if you're an individual taxpayer, you can't just go, well, it's 100% business because I sometimes have to take a phone call on it. In fact, there's now new rules around working from home and how you deduct expenses going into the new financial year. So that'll be something we'll talk about it in another episode, I'm sure. But it is really just looking at it and having a reasonable way of proportioning it. And if you really can't find a reasonable way to proportion it, I would suggest you don't claim it.
Yeah, that's right. And I do know with cars, there is the ability to keep a logbook as well, where you can average that out over the year too.
Yes, that's right. Or if you can't actually proportion it that way, if you're an individual taxpayer, you may choose to use the set rate method, which is a different part of the Tax Act, which allows you to have a different way to claim that, which is then based on what you're actually spending for business, not what the proportion is that you're using for business.
Yeah.
So, okay, a couple of things. Let's start with some of the legislation around what you can and can't have as a tax deduction. So one of those is entertainment. Entertainment is specifically denied as being a tax deduction. And when I talk about entertainment, I mean entertainment of yourself, your clients, your staff, right? So this is something we see all the time where people are going, I'll look through, but I had to buy lunch. Okay, so you had to buy lunch. That's fine. I had to buy my lunch too, but I don't claim it as a tax deduction. Jade, I know you buy your lunch some days as well. I haven't seen you claiming that as a tax deduction. Just because you happen to work for your own business doesn't make your lunch a tax deduction. Now, if you were travelling, that would be different. Okay, so if I travelled to another state or to another city where I had to stay overnight, then that may be deductible. But just the fact that I happen to own a business and I want to take myself out to lunch, or I want to take my staff out to lunch, or whatever, doesn't in itself make it a tax deductible expense. The only time entertainment is tax deductible is if you are going to be paying fringe benefits on that, in which case it does become tax deductible, but you are paying tax on it as well. So there is a bit of a caveat to that. But in general, entertainment is not tax deductible, and it also, you shouldn't be claiming the GST on it.
No, that's right. I mean, we see it all the time. People go out for lunch and they go, oh, use the work credit card, I can claim it on tax. You actually can't.
Yeah. So, and yes, you can probably find a connection to it. Okay, I'm not suggesting you can't, but it's just specifically said we can't claim entertainment as a tax deduction. The second one is, we have again talked about private and domestic in nature, and some of those things that I consider that regularly come up is something like childcare. Yep, I know you can't work if you've got your kid with you, okay, but that is not a tax deductible expense.
No, that is domestic.
Yeah.
That's just kind of everyday living.
Yeah. So, you've had a child. I appreciate it's costing you a lot to have them in childcare, but that doesn't mean that is, and yes, you possibly can't earn your income if you don't have them in childcare, but it's still, the connection is that it is a private and domestic expense. The same with clothing. Now, often I'll see people trying to put through all sorts of clothing as work-related uniforms. Work-related uniforms are specifically work-related uniforms that have to have either a logo to them or be protective clothing. If you're buying your protective clothing shoes from Country Road or, somewhere that is clearly not, like if it's at workwear or one of those specific workwear shops, we probably can get away with it. But, yeah, honestly, your shoes or your clothes, if they're just normal clothes, you cannot claim them.
That's right. And I think, you need to think, can I wear this outside of work? And if the answer is yes, then it's more than likely not tax deductible.
That's probably a really, really good way to look at it. Another one that, we've talked about as well when we talked about D is for dogs. A lot of people try to say, well, I have a dog that I need to have for work because it minds my tools. On my truck while I'm on site or whatever, specifically, unless that dog is a full-on security guard dog, which means it's probably in a paddock or a working dog, like on a farm, or if it's in a junkyard, making sure people aren't coming in, it's not going to be tax deductible. So because probably that dog is inside and is a pet.
Getting cuddles at night.
Yeah. So I think it's having a think about it. Is it a private and domestic expense, or is it something that isn't? And then another one I'll just put out there is everyone tries to work out how their boat can be tax deductible. I wouldn't even try unless you are genuinely. We do have a client who runs a charter yacht business. That's okay. But seriously, unless you're doing something that is a proper business to do with the boat, you're not going to be able to claim your boat. So the fact that you might take a client out on the harbour one day every so often does not make your boat tax deductible.
No, if you're a bricklayer or something like that, you cannot claim a boat.
Definitely not. The next part is if the expense is relating to income that is not assessable. So you could say, well, I, spend money doing something that does actually incur income for me, but it's not assessable income. So if you're making if you're doing something that's incurring an expense to an income that's not assessable, you can't claim it because there's not that necessary connection between that income. So an example of that could be gambling. If you're gambling, you're not going to be paying tax on the gambling money that you're making, so you can't claim the gambling losses. But there are other sorts of income that would be considered non-assessable, and if you're actually paying, making expense or trying to claim expenses against that, that's not going to fly either. Non-compliant payments. Do you want to talk a little bit about that? If you've got non-compliant payments in regard to withholding or reporting, and this is typically to do with wages or contractors.
Yeah, that's right. So something that we do see quite often, and we always stress to our clients, is that it's very important to pay your super on time. Of course, it's important because you don't want to get in trouble off the ATO, but it's also important because if that superannuation is not paid or not in the employee's super accounts by that due date, it is non-tax deductible. You cannot claim that as an expense in your tax return.
Interestingly, when I was reading this part of the ATO website, they talk about withholding, PAYG withholding as well. So not just super, because we know super, we know that. But they're also talking about contractors. So if you're not withholding and reporting correctly on contractors, so then technically that could be deemed as non-tax deductible. Again, something to be very careful of.
Yeah, exactly right. Exactly. It can get very messy.
Yeah, so does that mean if we haven't done our TPAR, is it not reportable? Is it breaching?
Non-compliant and you can't claim your contractor expenses?
Or if the contractor is someone who really should be an employee, but you've decided to put them on as a contractor, which happens all the time, should you be withholding for them? And if you're not, does that then mean that you're not compliant and not tax deductible? So interesting can of worms to open up there.
Very.
We shall not go any further into that. The other one I just wanted to mention out of the list that the ATO actually says is you can't claim the GST proportion of expenses if you've already claimed the GST.
No, if you're registered for GST and you're claiming that GST portion in your BAS, you cannot claim it in the tax return. The items in the tax return are the GST exclusive price.
Yeah, it would essentially be double dipping.
Yes, and the ATO say a big no to that.
Yes, I'm sure that does happen. A couple of other things I just wanted to mention is a moment too soon. So often people might be able to connect an expense to some income, but it's a future income, not a current income. This is often a good example of this is when you do study. So, I'm an accountant. If I decided I wanted to go and do a floristry course and then go, well, I'm going to claim that because I've learned a new skill that one day I might earn some income out of, I can't because I'm not earning any income out of it at the moment. No. So if you want to claim some sort of study expense, it really has to be related to, or a course that you're doing, it has to be related to something that you're earning income in, and at the time that you're doing the course, not at the time that you might earn income. And another example of that could also be responsible service of alcohol, if you're getting that so you can get a job working in a hotel, until you've got that job, you really shouldn't be claiming that, of course.
Exactly right.
And then the other one I just wanted to talk a little bit about was cars. Now, cars are capital in nature, first of all. So that means that the expense that we're deducting is actually going to be depreciation. It's not going to be the car itself, although at the moment we do have the immediate write-off. It is actually still deemed as depreciating. We're still depreciating that asset. We're just depreciating it at 100%.
The full amount.
Yeah, but there is a specific limit on how much you can claim on a car, and that gets adjusted every year. The current amount is $64,741. So if you buy a car that is more than that, if you're claiming the GST because you're in a business situation, you can only claim the GST up to that figure. And if you're and then you would then have a deduction for the depreciation for the rest of that below that figure. So it's about 57,000 or something, whatever it works out to be. And then if you're not claiming it if you're not registered for GST, so say you're an individual who is going to be depreciating their car for work-related purposes, again, that $64,000 limit is the most you can do. So be aware of that, because a lot of people get caught out. They're going, oh, I've got this really nice car. I've just bought a $150,000 car and I'm going to get a great tax deduction. Well, no, you're not.
Yeah, and it is something that we see quite often. So if you are thinking about buying a car, just speak to your accountant first.
It doesn't mean you can't buy a car for that amount. I'm not saying you can't. You just got to be aware of the consequences, that you're not going to be able to claim that deduction in such a high fashion. Yeah. Fines.
Yes, fine. Something other people try to claim. If you are travelling for work and you get a speeding ticket, you cannot claim that on tax.
Or a parking fine or anything.
Whatever it might be.
Yeah. Another one that a lot of people do try to claim as well is their licence, their driver's licence and their passport, both considered private and domestic, and you really can't claim that.
No.
If it was a particular licence, potentially like say a forklift licence or something, that's different, but just a normal driver's licence, a passport, not deductible.
Exactly right.
Even if it is for work-related purposes. So because you've got to go travelling overseas, but you're going to have that passport for 10 years, it's likely you'll use it for something else as well.
That's right. It's likely you'll use it for private use.
Yeah. So is there anything else that you can think of, Jade?
No, I think that pretty much covers it, Jo. We've covered a lot of the main things that we see here that people try to claim that they really shouldn't be.
Yeah. I think always go back to that very basic definition at the beginning. Is it related to my income that I'm earning? Like, how is it related? And yes, you can tell me a great story about how it's related. I'm sure everyone can come up with a great story on how whatever it is that you just bought is related to what you're doing. Is it allowable under the law? So sometimes it's not allowable under the law at all, in which case we just have to discount it. And then the other part is it private and domestic in nature? And that's probably the bit that gets caught out. Just another example I'm thinking about as I'm talking, often people have injuries from work, so they might have a sore back and they go, well, I need to get a massage every week because I've got a sore back.
No.
Sorry. Private and domestic in nature. Okay?
Yeah.
So I know you can think in your head how it's related, but if we say no, we're only saying it to protect you because we know it's not going to fly.
Yeah, that's right. And also just make sure you keep all of your records. So make sure you have your receipts and invoices of all of these expenses, because we've said it a million times, the ATO are cracking down quite a bit. So just make sure you've got all copies of receipts.
Yeah. Okay. Well, that's it for N is not deductible.